News now. Asia's stocks drifted lower today, joining a global sell-off on concerns over Turkey's financial crisis. Although they clawed back some ground on news that China and the United States would hold trade talks. Equities across the region suffered steep losses at the opening bell, with Tokyo and Shanghai off by more than 1%, dragged down by a weak session on Wall Street as traders fretted over possible contagion from Turkey's currency crisis. A red board across Asia, with the Nikkei down slightly at 22,192. The Hang Seng dipped 0.6% to finish the day off at 27,151, and the Shanghai Composite Index dropped 0.3% to close off at 2,717. US stocks closed lower on Wednesday, with the S&P 500 posting its biggest daily percentage decline since June, as investors turned risk-averse on a series of disappointing earnings and escalating global tariff worries. The Dow Jones Industrial Average fell 0.5% to close at 25,162. The S&P 500 lost 0.75%, ending at 2,818 points. The tech-heavy Nasdaq Composite Index dropped 1.23% to end the day at 7,774. Let's go to the JSE now. Arabile Gomede is standing by. Good afternoon, Arabile. The board looking a little bit greener than it was yesterday. What's happening?
Yeah, certainly a much greener board, as you say, Nzinga. The market picture in itself, despite negativity out of the United States, with red out of that board, and of course Asia sitting in red as well, the local indices and even Europe seem to be in the green. A lot more of the pain was felt out of Naspers yesterday, so certainly a little better picture coming out today. But with that, let's unpack exactly what happened in the market, and then we'll have a chat about it in just a moment. As you saw, of course, a much greener picture there when it comes to, well, the JSE, and slightly better picture when it comes to South Africa's Rand as well. Chantel Marks is an investment analyst at FNB Wealth and Investment, joining me now as you unpack the market. Chantel, thank you so much for your time. Greener picture for the market today, a little rosier. So perhaps all the pain was felt yesterday and we're better today for it.
Yeah, it's all about Naspers again. Well, not all about, but mostly about Naspers again. Yesterday, the stock really overshot on those Tencent earnings.
Yeah.
Tencent, of course, was actually closed at the time, or the Asian market was closed at the time. So when Asian markets were open overnight, the reaction in Tencent was not nearly as big as the reaction in Naspers. So we've seen Naspers recover a little bit. Another factor here has been a slightly stronger Rand this morning or today so far. So as a result, we've seen bank shares do quite well and financials generally do quite well. And that's really driving the market up right now.
If we were to take a look then at the graph of Naspers, particularly year to date, you will see that it obviously is a much better picture, and it's shot out the lights. At this stage, do you think that, I mean, just take a look at that picture in itself. It is slightly down on the year, but is it something to worry about?
Well, at this point, we're not really that concerned. If you look at Naspers relative to Tencent, it's still trading at quite a significant discount just to its holding in Tencent. And that doesn't even value the rest of its companies that they have in their stable. It basically gives a negative valuation to all their other assets, including quite large assets like a MultiChoice, and then also some of their classifieds and online businesses in Europe, and also in the United States for that matter. They've got a big food delivery business as well that they're invested in, called Delivery Hero in Germany. Just the Tencent stake they're trading at a deep discount at. And then as far as Tencent goes, I mean, that share also seems to have completely overreacted to this weak earnings number, as well as talk of a weaker earnings number leading up to yesterday.
Yeah.
So Tencent also down, I think, just over 20% year to date. And if you look at it relative to the rest of the market, and if you look at the actual growth that you're still getting out of the stock, and if you look at the outlook statement, and if you consider what the disappointment was for, then Tencent also still looks like it's offering value. So on both accounts, both stocks seem to be very attractively priced at the moment.
Even the 3-year graph, if you were to take a look at that, I think that would show a much clearer picture as to exactly why the picture out of Naspers is certainly one to still be buoyant and happy about. Just at the beginning of 2015, trading at around 1,600 Rand there, now well above 3,000 still. You know, still a better picture on that front. It is, however, about the regulation out of China, and the gaming consoles seem to have been a big issue. Is that something we think will be a problem, moving on in future? And what exactly is happening there exactly?
Yeah, so I mean, we were actually having a bit of a giggle this morning in our morning meeting, because one of the guys asked, well, aren't you concerned about regulation in China?
Yeah.
China's a communist state. It's all about regulation. So the regulator has always been there. And these games are very, very tightly regulated, because the Chinese government want to control what people are seeing, what they are exposed to. A lot of these games are quite violent, and they just want to limit what is going out there into the market. So what we understand is there's been a change in leadership at the regulatory body that's responsible for giving the final go-ahead to monetize these games. So some of these games are actually already in the market. They're out there. They're being played. It's not like the games have disappeared or they've been banned. But Tencent have not received the go-ahead to start charging users to play these games. There is one game that they have also pulled from the market for the moment, and that's a little bit of a concern, but it's not like Tencent doesn't have a massive pipeline of games that they are still going to launch over the next few months and years. So just a slight blip,
it's still going to get better. It's a rosier picture still, right?
It's a delay, because what's effectively happened is Tencent have put down the capital. They've developed this game. They've marketed this game. They've launched the game. They haven't received the revenue yet. So there seems to be a bit of a mismatch in terms of cost and revenue, and that has an influence on margins and the near-term picture.
Let's unpack the rest of things that have happened today. A lot of earnings news having come out. Met-Air had come out earlier as well. Exaro's come out. You saw a bit of Goldfields as well. That was bound to be negative considering the announcements we've seen out of there. And also Standard Bank. And I want to just touch on the banking sector particularly. Standard Bank coming out with its earnings not looking that good. But the fact that a lot of their revenue and a lot of their profit comes out of Africa, isn't that seems to be the recent banking picture for now? Yeah,
I mean, absolutely. Nedbank showed really good profit growth of between, I think it was like 26-27%. But almost all of it came from EcoBank, which is also its African banking asset, kind of returning to profitability. If you looked at the South African-only assets, headline earnings per share only grew by 2%. Same thing out of Barclays Africa or ABSA Group. Sorry.
They've gone through a massive change. I want you to change that name.
ABSA to Barclays to ABSA. So in terms of ABSA, it was the same thing. You saw some really solid growth coming out of the rest of Africa, and then the South African growth being very pedestrian. And again, a similar picture out of Standard Bank at the moment, and net interest margin really coming under pressure. I mean, it's something to be a little bit concerned about, because the banking sector really is a mirror of consumer health and of the economy.
Where does First Rand then get its growth from?
Yeah, I mean, so that's going to be quite interesting as well, because First Rand does not have a meaningful African footprint, which is where most of these banks are getting their revenue growth from. I think First Rand have a couple of extra levers to pull. We know the vehicle financing space has eased up a little bit, so they're very big in vehicle financing, of course, with Westbank, so there's that opportunity there. And then probably some financing into Africa by RMB, which they've got kind of like a satellite footprint. And then the Aldermore acquisition. So they made quite a large acquisition. Aldermore will probably be consolidated for a portion of the year, which might give a little bit of a boost to revenue.
A lot happening throughout the day, and certainly the market is one to watch out for as well as we get through the earnings period. Chantel Marks, thank you so much for the time. That's Chantel Marks, who's an investment analyst at FNB Wealth and investment. As we said, their resources going up around 1%, the financial sector 1.5% to the good as well. If you take a look at Bitcoin at $6,435 for one Bitcoin, it's up 2 2/3%. That's your market picture. Nompumelelo and Nzinga to join you right after this.